Well, hello there, friends, and welcome to another episode of the 360 Experience podcast. I'm your host, Tim Braheem, and today I have the pleasure of sitting down with a dear friend and business partner, actually, in Danny Horanyi. Now, if you've heard the name before, I wouldn't be surprised. Danny Horanyi has been around the mortgage business for over 20 years now, initially as a member of a top producing loan origination team that funded almost 900 loans one year. And then from there, working for such large conglomerates as Caliber Home Loans and now with Neo Home Loans. And in this conversation, Danny and I are going to cover a vast amount of information. He is an incredibly articulate man. He is incredibly wise. And I'm just going to get out of his way and let him do most of the talking because he has a lot to share. We're going to talk about captive audience marketing, as he coins it. And what that is how to take advantage of the opportunities on every single loan that you do to market to the listing agent, the buyer's agent, and the borrower to cultivate future business. So this is such an important topic in today's day and age. We're going to cover the perfect loan process as well and how that fits into captive audience marketing. We're going to be talking about what the modern mortgage professional needs to look like, what you need to have in your arsenal to be successful going forward in this competitive landscape with low inventory and with all of the fintech lenders and the Quicken loans out there that are really competing against you on a daily basis for your borrowers, and the very things that you need to be doing and studying and practicing to make sure that you're successful in the new landscape that we're in. We're going to talk about networking as well and a unique approach to networking where it doesn't make it so hard and it's just about you being you and leveraging the things that you're interested in. So buckle up, get ready to take some notes. This is going to be a dynamic conversation. There's going to be plenty of scripts that you're going to hear him recite in here as well. You're going to want to go back and listen to it and take some notes and make sure that you're leveraging all of the wisdom and the great teachings from Danny Horanyi. And before we go to this conversation with Danny, I just want to say thank you, first of all, for all of you that are subscribers to this podcast. It really means a lot to me. We're approaching 2,000 subscribers. And if you're not a subscriber yet, I would really appreciate it if you hit subscribe, just because the more subscribers we have, the easier it is for us to get great guests on the show. The likes, the comments, the forwards to people that you know are all greatly appreciated. It's really nice for me to be able to bring people that I deeply love in my life that I'm fortunate enough to call friends that are so intelligent into this platform. I've been getting a lot of great compliments from people lately that listen to the show. So thank you so much for reaching out and telling me that this is helpful to you. And without further ado, I would like to introduce you to Danny Horanyi, and I hope you enjoy our conversation in the 360 Experience. Well, this promises to be some fun. I know we're going to have some laughs together. Danny Horanyi, the man with the infectious laugh. It should be a good time. So, brother, thanks for being here today, and I'm super excited to just spend this time with you.
Tim, I'm so excited to be here. It's absolutely my pleasure.
Well,
Looking
you bring
forward to it.
yeah, you bring so much wisdom. I don't even know where to begin. Like I remember telling you a long time ago when you were in the Leadership 360 signature program that like I couldn't wait for you to meet some of the people in the master's program because I just knew they were of your ilk, just big thinkers. But before we get into, maybe some of the stuff that you're doing today that is extremely noteworthy, I mean, running a major company, take us back to the beginning and give us, 50,000 feet, your origin in the business, and really make sure that we brag on you just a little bit because you have some extremely noteworthy production numbers as an originator when you're originating loans.
Well, Tim, thank you for that. I started in the mortgage industry in 2003. I was actually working for a home builder in the accounting department. And I can go a little bit into the story if you're interested later, but I was effectively brought into mortgage because of happy hour, which probably may resonate with a handful of people out there in the world.
And anybody that knows you doesn't find that shocking.
Yeah, not surprising whatsoever. I started off in the accounting department of a national home builder, Centex Homes, and we shared an office with the mortgage company, CTX Mortgage. And this is back in 2003, where CTX mortgage was kind of the place to be in many regards. There's a lot. That's where Barry was, Stephen Marshall was, handful of others. Sue Woodard was there in that time frame. Some really, I was really happy to have been brought over the mortgage side. But I worked the first 5 years of my career as a loan processor and a loan officer assistant kind of hybrid role. And there was a situation with my family where around 2005, six, my family got into a loan that they shouldn't have gotten into, and I got kind of a gnarly conversation with my mom where she wanted help out of it, and I realized that there was no help to be given. It was a contract signed, and once I realized what had happened there, and again, I'm happy to go into this. I don't want to dive too far down that rabbit hole to get to answer your question. I realized that something needed to change in the mortgage industry, and I could help. And so I decided in that moment to become an originator. So in 2008, 7, 8 timeframe, I decided I wanted to actually help families and make a bigger impact. And on that journey from that point, kind of moving out of loan processing into originating, ended up originating for about 10 years. And during that period of time, my peak year of production with my team, I had 2 business partners, phenomenal human beings that were mentors and partners to me. And together, the 3 of us built a 34-person mortgage origination platform. And our peak funding year was 300, I believe it was 391 million, close to 900 units, like 890 units. I can't remember the exact number. It's somewhere out on the internet. You can track that information down, but we helped a lot of families. We did a lot of VA loans, having our business based in San Diego. And we had a lot of fun doing it.
So what was your role on that team? So it was like a three-headed monster, as I recall. Like the 3 of you guys were really, really potent together as a team. But what specific role did you play?
Yeah, I was effectively the primary mortgage advisor, and kind of the what I describe, and I know you've heard me talk about this before, Tim, kind of the captive audience marketing side of our lead generation engine. Really kind of coordinating the internal team, making sure that everybody understood their role in the client experience, understood their role in lead generation, which I'm a huge believer that every person in a mortgage practice is a lead generator to some capacity. And they all have a role in playing a role to play in the client experience, which therefore means they have a role to play in creating a referable experience. And I really had a large part to play with my partner Sam in the development of the systems that we had. So was very, very. I can say that our team would not have been what it was if not for the CRM that we developed to support our team and the processes that we rolled out. And I was very intimately involved in that. In fact, my wife, who you've met, Tim, is a computer engineer. And the 2 of us would spend the evenings programming Salesforce. At the time, there wasn't that. I don't know if people are familiar with Salesforce today, but they have a user interface called Process Builder today, where you can just kind of drag and drop your automation. Well, it used to be you actually had to program code to create automation. And so we would sit on our kitchen table with our kind of computers touching each other, kind of going and programming our automation in the evenings to kind of build out the systems and the processes that we knew we needed to create that consistent client experience.
So I want to spend a little bit of time here because, literally 1 week ago, you were here at my home in this recording studio that I'm sitting in right now, creating content for the Loan Atlas around the topic that you just mentioned, or one of the topics that you were focused on. And right now, bro, I feel that this is the time where originators really need to embrace whatever you want to call it. I call it the perfect loan process, but essentially a system that on every single loan takes advantage of the opportunities that are available to develop and cultivate new relationships. And I developed my PLP back during a time like this in 1999 when business had slowed down radically and rates were at 8.75%. And that is the time where you have time to build systems. And it's also the time where the loans that you have are precious. I mean, every single loan you do, it's not like 2020 anymore. I mean, in 2020, you were just trying to get loans through the pipeline and get them closed as quickly as you can. But now every loan is uniquely precious in that it has a couple of real estate agents involved, an insurance agent, a CPA, a financial planner, et cetera. And to your point, the unleashing of your team and getting buy-in from your team to embrace the fact that they are all salespeople and that that they all play a role in the future growth of the business is very important. So I'd love for you to spend some time sharing with us what you would advise originators to be doing right now as it relates to their loan in process to capitalize on these opportunities. Spend some time there, would you?
Yeah, Tim, and I want to start the answer to that question or that prompt by saying that the perfect loan process is a foundational gating issue to this. So captive audience marketing is not a replacement for the perfect loan process. It is a part of it, and it's a derivative of it. And so if you don't have a fully built out and consistently executed perfect loan process, you must start there. And the reason for that is that any effort to execute a strategy to cultivate business from your active pipeline depends on you being able to consistently execute on the other basic promises that your team makes when they agree to help a family. And those basic promises are you're going to, follow through on your rates and terms. You're going to provide them the necessary advice and guidance, and you're going to close on time, right? In a way that doesn't feel like they just got on a dirt bike on a bumpy road, right? It should feel like they got picked up in a limousine and driven to their destination, right? If you don't have that in place, then trying to solicit business from your active pipeline becomes very choppy because you never know when you're going to step on a landmine, making a promise that you can't deliver on. And so I would just offer that if you don't have your perfect loan process built out and systematized, I would start there, because just having that done that requires intention. So I'm not trying to say, when I say my next thing, which is without intentionally deriving business from the perfect loan process, just having the perfect loan process in place is intentional. But once you do that, even without creating a close off of it, you will still and very naturally see business, because there'll be an organic process where your referral partners and your clients feel the difference of working with a true professional, which is what having a consistently deliverable process communicates.
So let me just jump in there and synthesize for just a second before you continue with the difference. Or what I'm hearing is it's almost like the perfect loan process is the foundational application that every originator must have to transcend the experience from riding on that dirt bike on a bumpy road, which is a beautiful metaphor, to getting driven in a limo to the closing. And then there's an application that you load on top of that platform that is the captive audience marketing. And I love that phraseology because, Caleb LeGrand, who you know quite well. I mean, I remember when he implemented the perfect loan process over a decade ago now, he said to me, and when he said it, I was like, finally, it's somebody that gets it. Because back in the Loan Toolbox days, I used to fight with the development team that the perfect loan process actually belonged in the category of marketing, because it is actually the application that generates marketing opportunities. And Caleb finally said to me, he goes, I don't really need marketing. I have the perfect loan process. And I think that what he was talking about was that other layer on top, which is the captive audience marketing on top of your system of customer service, that then will just naturally generate a lot of new relationships from it. So speak to some specific ways that an originator through the loan process can generate additional relationships.
So I'm going to share, this will be a little bit redundant to those of the audience members that are Loan Atlas members, because I shot this module with Tim. And so you can find some of the specific scripts there. But I'll start with the kind of background to the creation of captive audience marketing, which is that I was failing miserably to generate a consistent pipeline of loans. When I started my mortgage practice, I just wasn't good at it, and I wasn't having fun, and I was on a roller coaster where some months I had deals and other months I didn't. And it was primarily because I was only generating leads from the grind, and I didn't have a way for that grind effort to translate to something that I could make consistent and sustainable. And I realized I had to change something or else I was going to burn out. And I also realized from a coach that, I needed to learn how to ask for the business. I wasn't good at it because and I'm not saying this to be like overly humble, Tim, but I'm not a great salesperson. I'm a very enthusiastic sharer of the good news. Like when I believe in something, I share about it so enthusiastically that it attracts people to that message. Mm-hmm. And I've found a way to be enthusiastic about something that I can earn a living off of. But I wasn't natural at just asking for business. I needed permission, and I needed permission from myself, not from my client. They didn't like what I learned later in my life, or what I am learning later in my life, is that people aren't like all the stuff I think that people are thinking, they're not thinking about it all. So it's mostly just me giving myself permission to ask for the business that was missing. Like they didn't know one way or the other. Maybe 1 out of 10 people would have been annoyed. 9 out of 10 would have just thought it was the natural thing that was supposed to happen when they interacted with a, mortgage professional. So I knew I needed a way to ask for the business that was where I could do so with confidence. So I'll just share the 3-step captive audience marketing process that I developed for our business. So step 1 was to celebrate an emotional leverage point or an emotional peak. And that most obvious one was when the contract got accepted. Even back in 2011 and 12, when our business really started to pick up, inventory was relatively low. At least in the market that I was operating in, it was still a big deal if you got your contract accepted. There would usually be at least 2 or 3 people that were trying to purchase a house. So we would celebrate that moment, and we would also use that moment of celebration to get the attention of the 3 critical parties. And there are many other parties that you could deploy captive audience marketing to, but the 3 critical parties are both agents and your client. And we would use that time to get their attention and set the foundation of what working with us looked like. To the 2 agents, we would ask, I'm looking at the contract, I'm counting out, 21 days, and I'm counting to this day. Do you agree that's the close date? I'm counting my, 10 days. Is this the contingency removal date? And we would just make sure. And the script was, look, I want to be able to shoot at this target and hit the bullseye. And the best way I know to do that is to make sure we both agree on what a bullseye looks like. And so can I just confirm a couple of things with you? Would this be the date that we have to deliver on these things? And sometimes the listing agent and the buyer's agent were misaligned. They were 1 or 2 days off because they miscounted. And being able to bring people together to say, hey, we need to get on the same page, it elevated the communication, and it let those parties know that they were safe because we cared enough to confirm these things. We weren't just flying by the seat of our pants like most of the other people that they'd interacted with. And the communication with the client was also a celebration, but most importantly, it was a handoff. And it was the opportunity to say, from this point on, Susie's going to be stepping in, and she is an absolute expert at making sure the I's are dotted and the T's are crossed. I'll, of course, be here, navigating and orchestrating this process, but we've deployed experts at every step of this manufacturing process. Probably didn't call it that at the time. That's my kind of current language, to ensure that you get to the end of this feeling like you got dropped off in a limo. And I would edify the team, make sure everybody knew where they were going to be involved, and more importantly, where I wasn't. So when they came to me and I said, "Oh, I'm not sure if your appraisal's in," that's not something that I actually keep a close tab on, because Susie has that covered. So let me make sure she reaches out to you in the next 15 minutes with that information. They knew in advance that I wasn't going to do that. It wouldn't be a surprise to them. So that was step one. Step two was probably the most important step, which is I would call both of the agents and the client and use a script that went something like this. We're about 17 days in to this purchase, and I'm so appreciative that we've gotten through the contingency removal period. And I have a favor to ask of you. We've been building this process and this client experience for years. And the way we've been able to get to this point is by asking for feedback. So is there anything that we could be doing differently or better, my team and I, so that the next time we work together or when we work with the friends and family that you feel would benefit from our process, it would be an even better experience for them or for you the next time we work together. And 9 times out of 10, because we had a perfect loan process, they would say, no, best experience you ever had. And then I would say, well, I really got to insist. I appreciate you saying so. I'm so honored that you feel like that you feel that this has been a great process. And any little minor feedback you can give us would be a great gift because it'll allow us to further refine our process to make it even better in the future. And sometimes they would say, no, best process ever, but sometimes they would give us feedback. And in either case, it set me up for step 3, which is when we finally got to the payday for the agents and close date and keys date for the client, we could celebrate again. And I could do one of 2 things. One is with those agents who I wanted to do business with and team, anybody who's building a mortgage practice that hasn't yet gotten to the point where you're picking and choosing who you want to work with, this is a perfect time to do that. So I would pick and choose who I wanted to deploy this next script with, which is, I'm so glad we're here at closing. Want to just congratulate you on, having helped this family to the finish line, and we just got their keys. And you probably know this because you're a real estate agent and you work with other real estate agents in your day-to-day. Not every agent's created equal. And I have to say, your level of professionalism, your level of communication, it's been a breath of fresh air. I'd love for you to stop by our office and meet some of the team members that made this happen. And, at that lunch, if you're interested, we can talk about how we might be able to do business again in the future. And so I would feel permission to do that because, and I missed a step, Tim. I'm going to back up one little smidge, which is I would say, based on the feedback you gave that the handoff between, Tim and Danny was a little bit sloppy at this stage, here are the things we've implemented to fix that. So what that communicated to that agent was that, one, I heard them. My ask of that constructive feedback wasn't just a token gimmick. I genuinely wanted to get that feedback and then do something about it, which again is just separation, right? The perfect loan process creates separation and communication and demonstrates professionalism. This is just another example of what we were the message and the reputation we were trying to build with that referral base was one of professionalism, showing them that I could hear that message and then do something about it inside of a 7-day, 10-day window, set me up to have permission to ask them for the business. And then the same thing's true of the client, right? I would go back to them and say, thank you so much for your feedback, or thank you so much for sharing that this was the best process you've ever had. And now let's set up the stage for how the next 30 years of a relationship is going to look like. And based on the experience you've just had, and now the knowledge that we're committed to this 30-year relationship of advice and guidance, is there anyone else or who else do you know that would benefit from a consultation? And through that, the outcome of that, Tim, and I can't emphasize this enough because I'm a big math guy, our business became exponential because we didn't stop the grind, right? We were still lead generating, we were still putting on events, we were still speaking, we were still quote unquote cold calling out to agents in the area to develop a new stream, a new funnel of business. And all of the closings that we had were feeding back into that machine new opportunities as well. So if every transaction you have turns into 1.1 more transactions, and you put it on a graph and show how that looks over time, your business goes stratospheric. Anyway, rocket ship to the moon.
Stratospheric. Yes.
Stratospheric.
Yes.
There we go.
Okay.
That's the word.
So I want to extract a couple of, well, there's a lot of wisdom in what you just shared, and I want to extract a couple of things for the listener to kind of sink their teeth into. So one of the things that you talked about that was very true for me as well is that I had a difficult time asking for referrals as well. And it wasn't until I had, and the resistance to asking for referrals is not always, but is quite often as a result of a lack of confidence in what you're offering. I mean, if you were supremely confident in what you were offering and truly knew that what you have to offer is better than anything else out there for this particular individual and their friends and family, it would be infinitely easier to ask for referrals because you'd have that confidence. But if you don't have a process that you know is great and that you know is going to make you look good. And that process is not just the process, it's your team as well. So if you don't have a team and a process that is dialed in, you are going to have some call reluctance to asking for those referrals and cross-selling other parties involved in the transaction. But the inverse is also true, which is the system and its performance and its consistent outcome, which is putting that person in a limo and taking them to the finish line and having them go, oh my God, thank you so much. This was fantastic, actually creates the confidence that's necessary. And you don't have to sell you anymore. You sell the system, you sell the team, you sell the process, rather than it having to be about the faced with the rejection of you. Like if you ask for it and they're somehow like now saying no to you, you're asking for them to opt into the experience that you've created. Again, whether it be a repeat customer coming back or them referring one of their friends and family members to have that experience, or a real estate agent deciding that, yeah, I'd actually prefer to work with Danny and his team or Tim and his team because it's a better experience for them. So summing that up, confidence comes from having a great system. And that's why it is so incredibly important. The other thing that you said, it's interesting because you did an adjustment to something that I did. And I don't know, maybe you even heard this from me way back in the day, but I like your up leveling of it, which is that I would always ask the client at the end of the transaction to give me feedback as to what we could have done better. And I like how you moved it up to the time of loan approval because it gives you the time to make those adjustments, go back in and have that conversation 10 days later once you've closed and say, hey, by the way, we took your feedback. Thank you so much. And here's how we're incorporating it, which is quite brilliant. The other thing that it does, though, for everybody to really get their head around is that by asking for feedback and then getting feedback that is positive and then not even settling for that, saying, you know, really, I appreciate it. I'm so grateful to hear that you found our process to be efficient for you and to exceed your expectations. But really, truly, we built this system on feedback from people like you. And can you just think of something that we could improve upon that you wish were different? That's an incredibly endearing message that you're sending. You're showing that you're humble. You're showing that you're looking to improve. You're looking for them to co-create and collaborate with you on the creation of something that's even greater. And it's these scripts, and you laid out 3 or 4 of them right in that beautifully articulated message. These scripts mean everything. And in closing, you know, again, every loan that you do is an opportunity. And I love that mathematical equation, by the way. If one loan, if every 10 loans you do, just create like a very, very conservative ratio here. For every 10 loans you do, you create one new referral. I mean, if you're doing 10 loans a month, you're getting one extra deal every month that you wouldn't have gotten had you not dialed it in the way that you have. And then when you graph that out over an extended period of time, the numbers really start to explode, which is what everybody's experienced that's implemented it. You know, there are people in the current signature program group. I just had a Zoom call with them this morning, our mastermind call. And I think like 7 or 8 out of the 12 people in that group have implemented the perfect loan process. And they're just raving about it, about how successful it's been for them for so many reasons, right? Because of the confidence they have, because of the cross-selling opportunities they have, et cetera. So thank you for sharing that. So let's go back to your career for a minute, because when you were at Caliber, you were in charge of non-QM, I believe. And then now at Neo Home Loans, you're essentially head of operations. I'm not sure of your title, but you're running a significant portion of the company. So you're very tapped into what's going on in the mortgage market right now. Let's talk a little bit about that experience. Give us a little bit of a background, and what does that background specifically tell you in today's market that you would find to be important for an originator to hear based upon this vast and extensive amount of experience you have?
So going back to Caliber, so the non-QM piece was actually an incidental kind of it was only a portion of what I was tapped into there, and it was actually not my primary role while I was in that kind of executive team of Caliber. I originally was hired on into a role called Director of Retail Innovation, which was kind of an interesting story, and another story that starts at happy hour. I'll actually go back a little bit further, and I'll try to be brief on this. I did not get inspired to, with my two partners, help 900 families because it meant that we were going to make a lot of money. I was kind of going back to that root kind of origin story of why I pivoted from being a loan processor, which I found to be, a very fulfilling job that I was good at, that at the time, in my life paid, really decent money, was that I did not want another family to be treated the way that my family was by a quote unquote loan originator. They were effectively robbed, and I knew that there was a better way to do it. So my intention from that point on until today, I still hold this as my primary motivation for doing this work, is to, like, in my mind, that is the avatar, right? Is I don't want anybody to be called the way I was called by my mom, saying that we got taken advantage of and we didn't know what we were getting into. Every family deserves to be given guidance that's appropriate to them, and to be given the facts, and to then be given a choice based on what is right for their needs. And so when in 2018, when I was kind of looking at the landscape, I saw that being even at the scale of business that we were at, that my personal ability to impact families in that way was limited. That I was limited to my market. I was limited to the people that I could touch, the hours in my day where I could get on and create a consultation that would result in a family getting that advice and guidance. And I wanted to get a bigger microphone. And so I happened to be invited to happy hour with a really good friend of mine, a guy named Phil Shoemaker, one of my longtime mentors and just a brilliant mortgage banker. And I started talking to him about things that I saw that were challenging with the mortgage industry. I thought that the way the expectations of originators were too low, and the expectation of their financial acumen and their ability to communicate and create systems to guide families to the right decisions was lacking, and that we were kind of catering to a lowest common denominator and not really on a cutting innovative edge. And so at the time I was working as an originator, and he said, look, I built effectively this manifesto. I had like a Jerry Maguire moment where I stayed up till 2 a.m. after eating some bad pizza, and I wrote this long I call it a manifesto of what I thought the mortgage industry should be like, and what clients deserved, and the way that originators deserve to be treated by their company, and the mindset that needs to be brought to bear to make that all come to fruition. So I built out this roadmap, and I shared it with Phil, who at the time was I believe he was like COO of production, or had a really prominent role on the retail side at Caliber. And he said, look, I got to get you out to Dallas to sit down with the CEO and, just share this with him. So I said, sure, if you're going to bring me out to Dallas and, I get to sit down with somebody that I have a massive amount of respect for. The CEO of Caliber was a guy at the time named Sanjeev Das, who later, at the time, I had a massive respect for him, but now he became a really significant mentor in my life while I was employed at Caliber. I sat down and shared with him this retail innovation roadmap, and he said, "You got to come here and do this. Like you got to show up. You got to essentially move to Dallas and become part of the executive team and bring this forward." So I decided that I was going to essentially retire from origination in an effort to kind of bring this concept of the modern mortgage professional to life inside of the Caliber organization. And 3 months into that job is when the head of non-QM resigned. And I was just tapped by the executive team there because I was, kind of doing my thing on the retail innovation side, but I had at that moment, and I'd been out of origination for a period of time. I was still the number one non-QM producer at Caliber, even though I hadn't originated a loan there in 2 years. So I was still holding the spot on the leaderboard of most non-QM loans originated. So they came to me and said, "Hey, if you were going to be the head of this department, what would you do?" And I laid out my 5 bullet point plan of how I would, increase adoption and awareness and marketing for the product, and said, "Well, okay, in addition to your retail innovation stuff, you have this now too." So that's how I ended up with that non-QM job. And it got me a lot of opportunity to meet. The thing I liked about the most about the non-QM job, Tim, is that I was operating in all channels of the business at that time, which gave me a tremendous amount of awareness as to the differences between being on the traditional retail banking side, being a wholesale lender, being a correspondent lender, and then also having impact on a direct-to-consumer platform, because Caliber had all 4 pillars of loan generation associated with its $80+ billion annual originations. It got loans from all 4 channels. And I had the opportunity to work with the executive team in all 4 channels. And especially in correspondent, it gave me an opportunity to meet with the leaders of other mortgage banks, because we were essentially inviting them to use our non-QM product instead of somebody else's, or in addition to somebody else's. And so I got to meet some of the most interesting and effective executives in the mortgage space, and was able to learn a little bit about what made their company great relative to others. And in some cases, it was the inverse, like what made their company not as great relative to others.
So
any thoughts on that before I move on to the Neo stuff?
Before you move on in the Neo stuff, I want to dive deeper on something. So you talked about just glancing down at my notes here. You talked about this terminology, the modern mortgage professional. And it strikes me that in today's world, with, the Quickens and, the fintech lenders and the consolidation that has transpired in the industry, the lack of inventory, the lack of yield spread, all of these things, and the direction that technology is going with being able to facilitate loans quite rapidly and have a lot of the back end done electronically, that there is a great need for people to understand what the definition of the modern mortgage professional is. And so I'd like you to define that. And it strikes me also that I'm going to make a statement, you can refute it. And if you do, you're probably right. So I'm actually checking in with you when I say this. But if the direction that we're heading in is the adoption of technology to streamline the process, then it strikes me that vanilla loans will be the first ones that will be absorbed by that adoption of technology. And an originator's ability to structure challenging loans, to be able to do non-QM loans, and those other type of product. And you go back to being a processor. So a part of being a processor is knowing how to structure loans, which I think is a unique component to this discussion. So speak to what the modern mortgage professional is, and to the extent that having a mastery of alternative product is a part of being a great modern mortgage professional. I'd like you to speak to that as well.
Yeah, Tim. And what I'll share as it relates to the modern mortgage professional, I think that, we could debate that. And I'm sure there would be people that would add or subtract from my version of that. So I don't want to say that I have like a definitive answer to that. And it's evolving, right? Because the definition of modern changes as the marketplace and the landscape changes. I want to first touch in on this thought about non-QM or difficult to originate loans, and I'll kind of share my view of that. I believe that an originator's ability to add value is going to be equal to the most complex case that they could solve. So I believe fully in the concept that you must have a portfolio of solutions that include non-QM, that includes reverse, that includes rehabilitation loans, anything that is going to set you apart. And the deeper your portfolio gets, the more likely it is that you'll be able to communicate and add value. Now, there's a little bit of a catch-22 in this and a little bit of a double-edged sword, because if you're not able to focus, right, if you're scattered too thinly across too broad a swath of opportunities, that can become an Achilles heel. And if you're trying to be a reverse lender and a forward lender and a non-QM lender all at once, that can get really chaotic if you don't have a good process to manage that. But the analogy that I would use, Tim, is a medical professional, right? If you're going to a family practitioner, right, the amount of income that a family practitioner can make relative to somebody that is a specialist, right, somebody that addresses really challenging cases, their income level is going to be different because the value they can provide is different. The specialist likely can provide all of the same solutions that a kind of family practitioner can provide, but they can also kind of come in to that rare case that is, maybe 1 to 3% of the time shows up, and they can respond to it accurately and expertly. Like that is what ultimately is going to set people apart. Because what I've learned from referral partnerships, business partnerships, is that the ideal state is that business partner will only have one partner for lending, right? They'll have a suite of partners to address property casualty, financial planning, CPA, whatever it is that is the broad suite of services. But their ideal state of their business is to have one lending partner. And that one lending partner, if all they can do is vanilla loans, well, that doesn't meet their needs. So they have to kind of blend in all of the other solutions, in the non-QM solution, the reverse solution, versus just having a one-stop shop person. You will get the vanilla loans when you can do the other loans. But if you can only do the vanilla loans, then either that business is going to be going to the professional that can do the non-QM business, or it will unfortunately get outsourced. And I think this is a unfortunate consequence of this kind of mortgage technology revolution, is that some of that business will get siphoned off by the bettors and the fill in the blank kind of tech forward companies. And the reason I say it's unfortunate is because my assessment of those platforms is that they're marketing companies that do loans. They're not mortgage companies that are leveraging technology. And that's a very different orientation, because at the end of the day, what families need is advice and guidance. And the difference between a good loan and a great loan, and a bad loan and a good loan, are significant when it comes to the long-term outcome for a family. So the best way to describe succinctly the modern mortgage professional for me, Tim, is a mortgage professional that leverages technology to facilitate a high-touch, tailored process. So technology needs to be maximized in order for that individual to be freed up to create bespoke, tailored solutions for every family that comes to ask them for help.
When I look back, I really loved your answer, because I'm hearkening back to, do you know Dave Gallegos? Have you ever met him?
Of course. It's Gallegos, by the way, but yeah.
Well, I know it just depends. I always call him Gallegos.
No, he says Gallegos, or but
he says Gallegos. Yeah, he probably is, knowing him. I'll have to call Lori, his wife, and ask her how they pronounce their last name. So in my conversation with Dave Gallegos, who I love and thoroughly enjoyed that podcast episode, we talked a lot about the fact that, about this notion about like not spreading yourself too thin, not being the jack of all trades, and how he was taught early on to steer clear of like commercial loans or multifamily loans and things like that. And I believe that to still be true, So I think that there's a sweet spot there. So it's like, you don't want to be so broad that you're not really good at anything. I mean, but you do have to be broad enough to where you can win a deal that nobody else could win. And now all of a sudden you have a relationship that pays dividends down the road. And my career is checkered. I mean, I have some really killer stories about tough deals that I got done and what the result was like we're talking, hundreds of thousands of dollars in return because of that. The origin of that entire 7-year relationship with 3 other real estate agents that happened to be in that realtor's office who I got introduced to by that original agent. So they're all interconnected. The origin was that tough deal that 4 other lenders couldn't do, but because I was an expert enough to get it done, I got it done. And so I really want everybody to hear that part loud and clear. And when you mention the ability to provide HECM loans and the ability to provide non-QM and the ability to pre-underwrite a file correctly and to really understand how to make this deal work when other people can't. Those are the keys that unlock the door to relationships. So super important. I want you to talk about your current role with Neo and how it applies to anything that might be noteworthy to today's mortgage professional and what you might be able to teach them. And then I want to transition to happy hour because Chong is waiting for me to address that subject if he's listening. Go ahead.
Yeah. So Tim, actually, before I move on to Neo, I want to offer a reframe for anybody that's listening that there is actually no such thing as a vanilla loan because there's no such thing as a simple human experience. Like maybe there are families that are truly like simple, like they have, their income is clear, their retirement plan is clear, they're clear on how they're going to pay for college for their kids, they're clear on how they're going to age in place, they're clear on how they're going to take care of their aging parents, they're clear on all those things. Like if you find that person, right, I would say that's a vanilla deal. They can self-serve and they can help. Like the loan that they're asking for likely can be solved by AI. If there's a person who doesn't have their retirement figured out, doesn't have their kids' college fund figured out, doesn't have their aging parents solution put in place, they're not a vanilla loan. They need the advice and guidance of a true professional, regardless of whether they need a 30-year fix with 50% down or not. They need something else. And it's the need behind the need that actually matters, right? It's not the loan itself is just a conduit. And this is actually a good segue into Neo because this is essentially what Neo was designed to facilitate, is create an environment for mortgage professionals that believe what I'm saying right now to gather together and collaborate so that the client experience can be constantly up-leveled and the quality and consistency of advice and guidance can get to a stage where it is known that this is what a mortgage professional's role in a family's life is. And anyone else that's not delivering that, the client is making an active choice to choose into product B because product A is known to be a lifetime of advice and guidance that holistically addresses the needs of that family, regardless of the loan type that is going to be most appropriate for them today.
Go hit time out there. That's like money, dude. Like you're hitting on something so critically important right now. I mean, I love this concept. There's no such thing as a vanilla loan, or there are very few of them, because you're conditioning those that are listening to, and it goes back to the old Barbara Walters quote, one of the greatest interviewers of all time. She said, it's never the question that you ask in the interview. It's the question that you ask after you get the answer to the question that you ask that's important. So it's that second layer. It's going deeper with the person to really understand and expanding it. I just took down a note right now because I never made this connection. But my goodness, like every single loan that you do, you should be asking the people about their parents. And how old are your parents? What's your relationship with them? What's their financial situation? Because there's a HECM loan potentially there that's available that they need to know about that might benefit And you go back to the podcast episode without going down this rabbit hole. Go back to the podcast episode, listeners, and listen to Trevor Carlson and how he positions a HECM loan to be the gateway to having your life back, like to actually having the ability to live where you want to live in your later days of your life, to be able to get on an airplane and go actually see your family at the holidays rather than just send a holiday card with $100 bill in it. That is a really great point. Like if you get nothing from this conversation, folks, I mean, just going to that extra step of digging in and asking them a little bit more about their extended family and seeing what opportunities might exist there for you to solve for them. So thank you for bringing that up. Keep going now with your current role at Neo and your passion behind it.
Yeah. So Tim, I'm one of the co-creators in Neo. The intention of kind of building this platform was really to address this concern that the industry is sick, right, or has been up to this point. It's that there's a problem, a lingering problem, and I'm going to share that I believe that the expansion of platforms like Quicken, and I'm not trying to call out Quicken. I might actually call out Quicken to a certain degree here because there's things about their practices that I think are questionable. But the evolving marketplace that has driven clients to seek platforms like Quicken that are not personal. They're designed to be impersonal, right? They're trying to build trust at scale through advertising and marketing, not through advice and guidance. That's the result of the industry evolving to a place where we've essentially forced the clients to seek out a lowest common denominator solution. And much to the disservice of those clients and the families that are getting advice from these platforms that are not equipped to help them in a really robust way. And I'll just give an example, and this, is definitely up for debate. And Dave Ramsey would debate the value of a 15-year fixed mortgage over a 30-year fixed mortgage. But in I think it was 2020 or 2021, and I'm going to just paraphrase this. So feel free to fact check me and put in posts or whatever that I got my numbers off a little bit. But the most advertised loan was a 15-year fixed loan with 2 points. And this is when the average interest rate being offered on a 30-year fixed basis was 3.25. So then the 15-year fixed loan was available at 2.5, 2.625, right? Well, why would a family pick that loan? Well, they would pick it because of the egoic emotional impact of having a loan with a 2% start, like our two handle, right? My loan's 2.625, your loan's 3.25, I'm better. But the actual value of that loan, the 2.625 loan where you pay 2 points to get that rate versus the loan that's 30-year fixed that you pay no points to get at 2.25, dramatically different impact on a family. But marketing convinces the family that they want the 2% interest rate versus advice and guidance to, hey, what would cash flow look like? Hey, what is that 2 points really buying you? Right? What are you getting for that over the life of this loan? Does it make sense for you to do that? I would argue that there's not a single family that would be better off with a 15-year fixed loan for 2 points at 2.625 versus one that was going to get a 30-year fixed for no points at 3.25. And that's the difference between marketing and advertising driving decisions and care and advice and a holistic view of a family's finances driving decisions. And I believe a modern mortgage professional must be able to genuinely, not as a gimmick and not as a scheme, show up for that family as a true fiduciary and a true advisor and tell them not just what they can do, but what they should do. And Neo was built essentially to gather together as many people that believe that that is what the market needs as possible. And we believe that if we get enough of those people together, it's going to set the expectation. It's going to require others. And P.S., Neo is not the only platform that's doing this. There are others out there that we've we speak with constantly because they're friends and allies in the industry that believe the same thing, that are going out there with the same message. And we're so happy to be, fighting alongside them to kind of battle this idea that a mortgage is a commodity, which we firmly believe it is not. We also believe, and we're building a platform that one of the biggest crimes that has been inflicted on the industry is taking entrepreneurial business people and convincing them that they must be treated, that they deserve to be treated like an employee. Now, there are things that are, very, very good that came out of Dodd-Frank. And I'm a huge, huge fan. And in fact, that loan that my parents got that was catastrophic was a 2-year fix with a 3-year prepay, 28-year adjustable every 6 months. That loan's illegal now, right? Nobody can get that loan again. And thank you for that, right? Some great things came out of this, but the consequence of, a business owner, somebody that's building their book, building their database and really growing something, being treated like they are owned by a platform and a company is something that never really sat with us. And so we've been building a platform that allows for entrepreneurs to behave and act and be treated like entrepreneurs and like partners instead of like employees. And the consequence of that is that it gives us the ability to gather all these minds together that are now not just asking, what can I get from you, but what can we build together? And so to my specific role in Neo, Tim, is to help kind of run the systems, the processes, the platform to kind of bring all this to life, right? We have a collective vision, and I'm my kind of the term used inside of the company is I'm the integrator. I'm like conducting the orchestra that is all of the talented people and bringing it all together to try to bring this dream and vision to life.
It's interesting because what you're really talking about is the mortgage professional that actually understands money.
Yeah.
And unfortunately, and it's quite shocking. But look, I mean, I've been in the mortgage industry for 30 years and I don't profess to know everything I should know about money. I'm constantly learning. I mean, our conversations with Robert Breedlove, had a huge impact on my knowledge of the subject matter of money. And if you don't
Mhm.
know who he is, everyone listen to my episode with him in the 360. It's fantastic.
Great.
But the stuff that Barry's been teaching, Barry and Dan and Megan and everybody over at MBS Highway with CMA, I mean, that's very important material.
Mhm.
And you look at something like what you're talking about. So, you know, if you borrowed the 3.25 on the 30 year and you didn't put the points down and you dollar cost averaged that differentiation in payment along with those 2 points back into a laddered bond portfolio that goes out 10 years and beyond, right now you'd be earning arbitrage, right? You'd be paying 3.25 and earning 4.5 to 5% on stuff that's relatively long term. And this is how people have built wealth all throughout history is they use leverage and they win with arbitrage. But the thing that's really interesting is when I was talking to my mom about her HECM possibilities, which we've determined it doesn't make sense for us to do a HECM loan for her right now, but because her financial situation is pretty solid. But when we talked about it, my mom started crying. And the reason she started crying was because she said, your father worked, my dad passed away. So she's like, your father worked so hard to pay this house off. And now we're talking about going in the opposite direction of what he worked so hard for. That's a mentality. That's a psychological mindset that's been ingrained into the generation of home buyers that are currently everyone's clients. And a part of this process needs to be to educate them on an entirely different perspective that's a wiser perspective, which is no, actually owning your home free and clear is actually kind of a foolish play, especially if you can get an interest rate in that's, sub 5% or even an interest rate at 5.5 or 6%. Like it doesn't necessarily benefit you long term to have that much of your money tied up or that much of your wealth tied up in equity in a home when there are greater things to be doing with it. So I'm thrilled to hear. And of course, so many of the loan originators from Neo are friends and clients of mine. So it's a common it's a common theme that I see as they come through the Leadership 360 program and I get to know them, that they're truly taking a different approach to the way. I mean, we just aired. I mean, we're airing this conversation. We're recording this conversation on the 15th of March, and today was the Katrinka Condi, podcast episode aired, and I listened to it bright and early this morning when I was driving to my doctor's appointment, and it was so refreshing just to hear her approach to working with a client and the things that she says and how she truly cares about the bigger picture for them. And when you do that, and people realize the authenticity behind the fact that you're actually not being selfish or being selfless in your advice, that's where referrals come from, because that's where loyalty comes from. Because when you actually take care of people, they want to reciprocate. They feel comforted and they want to reward you for it.
Yeah, Tim, I couldn't agree more, and I really want to emphasize that it's okay to make a great living because you're creating value and you're creating inspiration and empowerment, and you're creating more value for your client than for yourself, which I believe that we do, and I believe that most mortgage professionals do that when they give great advice and great guidance. They're creating generational wealth for those families that they're helping. And it's okay to make a living off of that as a consequence of the value that you're creating. That one of the things we say a lot at NEO is that we're looking for patriots, not mercenaries, right? Because patriots win wars because they're there for a cause that's greater than themselves, and they're not there just to make a buck. And what is true, and I think what really allows for, well, two things are true. One is what you just described is a really unfortunate evolution of the propagation of fear and misinformation, or kind of quasi information that leads people to choices that aren't in their best interest, but feel intuitively right. Like it feels intuitively right to have a paid off home, without being equipped with the knowledge of arbitrage and the knowledge of leverage. It just feels natural to just not want to owe money until you get a little, one layer, two, three layers deep in the conversation. And you realize, wow, it's not only not irresponsible for me to have leverage on my home, it's actually really wise for my family for me to do that, because otherwise I'm essentially leaving money on the table, in sometimes large quantities. So the other thing that's true, which I think is really foundational to what we're doing, and not just at NEO, but all mortgage professionals that are really coming forward from the heart of education, is that only 1 in 10 families will reach out to a financial planner. The other 9, and this is an article I read also, so I might be misquoting this, but I'm pretty sure it's 1 in 10. So 9 of 10 do not. It's because they're ashamed. They don't feel worthy. They don't think they have enough money to justify that conversation. They don't deserve that advice and guidance. But those same 9 people will go to a mortgage professional because the idea of becoming a homeowner is too compelling. And yes, you still have to get financially naked with a loan officer, with a mortgage advisor. You got to give them all your docs. You got to show them your pay stubs. You got to tell them about your divorce and your bankruptcy and all those other things. But it's worth it because the other side of that conversation is a house. Whereas it's not worth it to expose yourself to a financial planner because they're fearful that they're just going to be told, oh, you don't have enough money to be worth my time. So I believe that we have a really tremendous opportunity to change that narrative, right? And bring forward a worthiness that starts with the ask for help, right? Which is what happens when families come to us. They're saying, hey, can you help me do this thing? At first, what they're asking us for initially is to help them buy a house, get them a little bit of money to do that. What they're really asking is to help achieve some deeper need, right? I need that extra bedroom because we got a baby on the way, or I need to be in this school district because my autistic child is only going to be served appropriately here, not in the one that we're in today. Like there's things behind these undercurrents that motivate people to come to us and ask for help. And when we have that opportunity, if we end there, right? And we just deliver them the loan, we've missed the society changing opportunity that's in front of us as an industry.
Powerfully said. Really, really beautiful. Man, I mean, there's a lot to learn from this conversation in terms of, the average loan originator asking themselves, how am I showing up? And what do I need to do to up level my game to position myself to truly be a modern mortgage professional? And what I'm hearing you say that it starts with, well, there's a few components to it. I'm not sure which one it starts with, but I'll say it starts with caring enough about the other person to ask a lot of the intelligent questions to get past just the surface level information that's driving their true need. And then also caring enough to educate yourself and to truly become a student of your craft to where you actually have something of value to give to them so you can make a difference in their life. And it all goes to your origin story, to quote Renee Rodriguez, around what happened with you and your family. All right, pivoting. We have a few more minutes here. Let's talk about networking for a minute. I feel like it might be a topic that you could speak to. I don't know. We've never talked about it, but I mean, um, you've mentioned happy hour several times, so there might be something underneath that. So I'm gonna, in the spirit of going at a deeper level to the conversation, um, what has being social in your life done for your business? And are there any specific intentions behind you going to happy hours, you socializing with the CEOs of other companies? It feels like a lost art to me in today's today's age of technology, where people are on this medium that we're on right now a lot more than they used to be, and not face to face. What is it? What do you have to share as it relates to the importance of being belly to belly and to be social with people?
So I'm going to answer that question first by describing how I showed up in my mortgage practice when I was in my 20s. And I wore a shirt and tie every day, sometimes a jacket. I had a very specific and righteous view of what a professional looked like and how they behaved and what they did. And it was completely unnatural to me. Like, I wasn't comfortable in my own skin. I didn't feel connected to myself. I was always a little. I'm still kind of an awkward person, Tim, and I'm self-aware enough to know that. And I was even more so because I wasn't in my element. So the first thing I would offer as of advice to anyone that hasn't discovered this for themselves is the most successful you will ever be is when you're being yourself. And when you're comfortable in your skin and you just decide to lean into whatever weird you are. And I'm real weird. And I've leaned
Yes, you are, my
I'm
friend.
real weird. And I lean into it, and I get the privilege of not having to put on a mask, and you get what you see. And it allows me to just be free in who I am and what I say and what I do. Not in a way that's like, I'm thinking about the movie Bulworth. Did you ever see that, where the guy
No.
is dying and so he just says whatever's on his mind and he's just a total a-hole? Not like that, but from the standpoint of just being comfortable. And that the consequence of that is that, and this might be surprising to some people who are listening to this. It might not be surprising to you, Tim, because you and I know each other very well. I'm actually a natural introvert. So it is not natural for me to seek social situations. What I seek is interesting situations because I love having great conversations. Like, it's one of my, it's like the currency that fuels my soul, is being able to sit around a fire pit with a glass of wine and talk about economics and talk about, sit down with Robert and talk about the definition of money and how, how inflation is slavery. Like, that's inflammatory and interesting stuff, right? So my experience of networking, Tim, it may appear social, but it's more like collaboration and masterminding that is happening. And that's, I think, the biggest consequence and the value that that's provided to me is that it's attracted me to really, really interesting people because I'm not good at small talk. I'm not good at surface conversations, but I'll sit down for hours talking about a subject that's interesting to the speaker. And I every time I do that, I learn so much. And you'll be surprised how long people will go and how much they will share if you just sit down and listen to them telling you about their superpower or the thing that keeps them up at night or what they're reading and why. Like those conversations have been massively valuable, and it's created some of the greatest friendships of my life, and today some of the greatest partnerships of my life.
Yeah, actually, I didn't realize that you were introverted because you don't come off that way when we're all together in the Leadership 360 family. I mean, you're definitely one of the leaders in that social environment that we experience at the fire pits on our retreats and all that kind of stuff. But as I heard you explain it, I realized how accurate that really is, what you described, that and I think it's a huge takeaway, right? Like it's you have found your comfort zone. Like what is the type of conversation that you like to have, that you thrive off of and that you get excited about? And then you seek out those types of engagements, and it has naturally generated a situation where you're perceived as being an extrovert and a networker. It would be like, and this is a lame example, but I'm an introvert too. But like like if I was in a room of a bunch of people and required to network on the subject matter of, well, quite frankly, the subject matter of let's just say mortgage underwriting guidelines. Okay. I would be looking for whatever escape door there is in that room because I find that to be incredibly boring information. Like I'm not interested in RESPA guidelines. I'm not interested in loan underwriting guidelines, et cetera. And there's a lot of other topics I'm not interested in. But if in that same room are a bunch of baseball fans, I'll stay there till 10 o'clock tomorrow morning. Or if we're talking about travel, I'm there for as long as everybody wants to talk about travel because those are topics that are of interest to me. So as we unpack that, I think this is a really interesting takeaway. So if networking is something that we should all be doing because it's the foundation of connection, and connection is what our connection is what our business is driven by, is having a lot of good, meaningful connections. Um, then maybe really thinking strategically about what are the things that I love to talk about? What are the conversations I love to engage in? What are the questions that I can ask people? So the conversation naturally goes to a place where I'm extremely comfortable and I can connect with people and feel right at home inside myself. That's what I heard you say.
Yeah.
Is that accurate for you?
And Tim, it has the secondary consequence that, so let's think about the intention of networking, right? You're networking with intention, and likely it's the intention of developing business partnerships or some other professional outcome, right?
Yeah.
You want a new mentor, you want whatever it is, right? So you're seeking partnership. The chances of having a sustainable partnership with somebody you like goes up exponentially versus somebody you're tolerating or that it's a chore to be around or to engage with. So if you're finding people that you like because they like what you like, your chances of developing sustainable relationships goes up exponentially.
Yeah.
It shouldn't be a grind or a chore to be with people professionally, right? It should be natural and comfortable and fun, especially if you're talking about like a realtor lender relationship where you're going to get into the shit at some point, right? Something's going to go sideways. It always does, whether it's 1 week later or 10 years later, a deal goes sideways. And you want to know that the person's going to show up as a partner, not treating you like a vendor. And the best way to do that is to have a relationship that at its foundation is based on mutual respect and connection and trust, like you just described. So I think that the process of networking for me, and I'm kind of thinking of this in real time, is more about exclusion versus inclusion. Like, who am I naturally not attracted to because I don't need to invest time there versus who is interesting and who would find me interesting enough so it's natural and comfortable for them too, because I want that partnership to be mutual. It's not just one-sided.
Yeah. I used to have this phrase. It was super rudimentary, but it was true for me at the time. And it kind of speaks to what you're saying, which was my definition of a real estate agent that I want to work with is someone that I could go have a beer with, and it doesn't matter that they're a realtor. Meaning like I want to hang out with this person. Like I genuinely enjoy their company. Like that's going to become my filter from which I'm going to make my business decisions from this point forward. Is this somebody who I actually just enjoy their company? Because if it is, then the relationship is so much more fluid and more successful because there's a connection there. So that's a great takeaway to end on. I know that you have an appointment you need to get to, and I'm sorry that we started this episode just a tiny bit late because of my doctor's appointment that I was coming from. Danny, thank you so much, man. It was really nice to spend time with you. You're such an incredibly smart and articulate man, and I'm really glad that we sat down here to have this dialogue.
Yeah, this was really fun, Tim, and I'd love to come back anytime. Really
Okay,
appreciate
well,
you, dude.
we will do that, brother, and it's great to be partners with you in the Loan Atlas, bro.
Yeah, same.
Hey,
Cheers.
buddy.
Have a good one, Tim.
Bye, everyone.